Hello and welcome to Three Questions with. I'm my buddy Jonathan with us from DeSanctis Insurance. Good morning, Jonathan. Welcome to the show.
Good morning, Kevin.
So let's just jump right in. Tell us a little bit about what you do, my friend.
All right. I work at DeSanctis Insurance in Woburn, Mass. We are a specialist in property and casualty and surety bonds for commercial contractors. So essentially, we provide all lines of property and casualty, workers' comp, general liability, auto, umbrella, and so on, as well as the surety bonds. Surety bonds are typically needed within municipality, state, and federal projects. Sometimes in the private sector, lenders require it. Also, certain GCs and developers will require a surety bond for certain projects, and we handle those.
Let's talk a little bit more about that. Like, what if someone, is trying to bid for a state contract for the first time? What's the process of getting one of these bonds? Is it easy?
It's not easy. It's basically a bond is a financial backing.
Yeah.
It protects the owner or general contractor from a subcontractor. They need to perform based on how the contract is outlined, timelines, costs, specs of the job, things of that nature. And then on top of that, there's a payment aspect that the subcontractor or whoever's the bonded contractor will pay their subcontractors, their suppliers. If they don't pay them, then they can in turn go after the bond for the bonding company to make payment or make due on what they're owed.
This really sounds like it protects everybody, because I know I've seen deals where Jonathan gets the bid and, well, geez, but I'm waiting on Cav because he's one of my subs and Cav's 3 months out. And it just seems to cause all this havoc. So this way, it kind of makes sure everyone's staying on schedule, everyone's getting paid.
It is. It keeps everything in line. Obviously, there are, especially with today's climate and construction, there are certain, the delays, supply chain. Those things have caused a little bit of chaos in my industry, but it does keep people in line and on time, to a schedule that fits and works for everyone, and also make sure everyone gets paid at some point.
That's what I like, is I've had friends who've been subs for, some larger general contractors, and, they're chasing them 6 months later for payment. And guys, like, it's really harming my business because I need to pay my people. And if I don't get paid from him, I don't have money to pay for my people. It starts that like domino effect, right?
It does. And that's where, the surety bond comes into play from a protection standpoint. Someone can't, if someone has a bond on a job and they decide they don't want to pay someone, well, there is, an avenue to get it, to get paid. And, to avoid litigation, the GC or the developer owner, tends to make those payments. And to go back to your point where your friend was chasing people for months, and I don't want to go down a rabbit hole of something completely different, but there's prompt pay laws in Massachusetts now where you can't, for certain project sizes where you can't do a paid when paid type thing. You have to pay within a certain time frame. There are, statutes in place for that.
Yep. No, that definitely makes sense and stuff. Now, if someone's looking to maybe do their first state contract and they need help, can you kind of walk them through what the expectations are before they go out and bid on something that they may or may not want to get involved in?
Well, there's DCAM, which is, the State Department that handles, project qualifications. You have to do, DCAM certification. You have to, do the application. You have to supply financial statements, and it's based on, what your biggest job has done to date. That'll get you per project limit, and then there's an aggregate amount that comes into play, based on your experience and other factors. So getting DCAM certified was one of the first steps, because a lot of these jobs you are required to have a DCAM certification. If you don't, you're disqualified. So there's multiple steps. From a bonding standpoint, you get your CPA to do a financial statement. We would review it, submit it to a surety, and get surety credit or a program in place. but you also have to go through, the state process and get your DCAM certification. So you're allowed to bid on these jobs because, again, that's how the state keeps everyone in line.
Makes sense. So, Jonathan, if people have questions, what's the best way to reach out to you, learn more, my friend?
You can call me. Obviously, my number is 781-569-0112, or my email address, jduggan@DeSanctisINS.com. Go to our website. You can kind of see what we do, and certainly it starts with a conversation. What their expectations are, what I can help provide. It's not a perfect match for everyone, but I think we have the surety programs to match almost anyone, as long as they're willing to put in there's a cost obviously with it. You have to get a CPA to do some financial work on the back end, but it's certainly a process that we can walk you through from the beginning to the end.
Beautiful, Jonathan. I appreciate you taking a few minutes to call into the show, and as always, thanks for being my friend.
All right, Kevin. I'll talk to you soon.